This is our weekly market alert video for the week ended September 10th, 2021. And this is also the weekend that is the 20th anniversary of September 11th. And so I wanted to talk a little bit about that. For those of you who were there during that time, who remember it, it's an event that I think is etched in our memory and in our hearts forever. This morning the stock exchanges had a moment of silence, and I participated in that. I was watching, and it's amazing how something that 20 years ago happened can still fill your heart and bring a tear to your eye. We tend to put those things aside and not think about them, but when certain events happen to remind us, it brings back those emotions. I remember when I drove home that day after work. I have a 20-minute commute. I cried all the way home, and the image that sticks with me the most is when the big cloud from the collapse of the buildings just enveloped everything, and it created this fog that nobody could see through, and all those brave first responders who went into that building with total selflessness. They were blowing their whistles so that others could know where they were because you couldn't see anything. And, that sound, I remember it like it was yesterday. It's haunting. It reminds us also that we must always be vigilant. There are people out there that wish us harm. And it also reminds us to be thankful for our military and the protections that we have against those kinds of things, and all the people involved in protecting us from those kinds of things. It's amazing the work they do, and we're so thankful for them. What happened on September 11th is something that I know I will never forget, and I don't think any of us should forget. So let's talk about something not as important as that, trivial in fact, as you put it in perspective with regard to those kinds of things. But let's talk about the stock market, and let's talk about our investments. As you guys know, our fearless forecast for this year was Dow 35,000. And of course, we met that earlier in the year, and we did not amend that. We left it at the Dow 35,000. And the reason why is because, human emotions, investor emotions, tend to cause the markets to go up way beyond where they should. But then also the opposite is also true. It tend to fall way below where they should. So it tends to create these extremes. And so that pendulum, the swinging back and forth of emotions, will get us above the 35 and below the 35 as we've seen. And as I record this, we are below the 35 right now. What does that mean in terms of going forward? Well, we believe that the drivers of profits, which are therefore the drivers of stock prices, are still in place. One of them, of course, is the mismatch between supply and demand. The demand is high, but the supply is not, because the supply chains are not back online, and all kinds of issues have arisen in that regard. And so there is such a huge profit to be made by fixing that we believe that it will get fixed. It's taking longer than we thought, and certainly that's causing, we think, the selling that we're seeing. And so that's certainly an issue. The other issue, of course, is that workers are not going back to work in the numbers that were anticipated. There's 10 million job openings, and they're not getting filled. So as those jobs get filled, we believe they will, companies will produce more products and services, and as they do that, they will make more profits, and as they do that, their stock prices should rise. So we think that that's still a driver that will continue to drive the markets going forward. In addition, we have the continuation of the COVID virus in its mutations and its variants, and that's causing concerns. The Delta variant certainly, and probably there will be others. The thing with viruses is, unfortunately, they never go away. Think of polio, for example. These things, they just don't go away. So we're going to be dealing with COVID for many, many years to go. But can we control it? And will this pass? The Delta variant, if you look at Asia and Europe, it spikes early, but it comes down quickly as well. And so it looks like we may be reaching the peak of that. And as we come down the other side of that, things should loosen up again, and we think we'll see the economy continue to progress. So The things that are worrying the market, that are causing the sell-off that we've seen, we think will take care of themselves over time, and therefore we think that inflation will subside also. And given all of those dynamics, we think we're going to see more all-time highs leading into the end of the year and probably the first half of next year. So having said all of that, we hope you have peace of mind. We hope that you are not worried about all this stuff. We are not overly concerned about the selling we've seen in the last week. And we think it's just a normal part of what the markets do. And so we're not near our sell signal or anything like that. No action is required at this point. But of course, we will watch it to make sure, if we think that there's a risk to you, we will take action. No doubt about that. You can rest assured of that. So we hope you have that peace of mind. We hope the summer has been good to you, that you've enjoyed your second childhood without parental supervision as much as you can. And we hope that you don't worry about this stuff and you'll let us worry about it for you. I'm also going to encourage you to share this video with friends and family, and also to subscribe to it. We're seeing a large number of people subscribing to our podcast and to our thousands, in fact, and to our video, and that's very encouraging. The more people we can get our message out to, the better. So share this with as many people as you wish, and hopefully they can benefit from it as well. So thank you for everything, and we will talk soon.